Today's edition of Toggle's Daily Video Insights. As many of you know, this is the moment when we review one of many insights published daily by Toggle, and if you'd like to see more of these and be alerted to them, please subscribe to our YouTube channel or check us out on toggle.global, where you can also test drive the Toggle Copilot, the first intelligent portfolio dashboard. The focus today is going to be on Nike, a company many of you know and are very familiar with. And what actually is worth noting is that just this morning, Toggle has highlighted a incrementally positive bit of data development for the company. In particular, it's highlighted that actually earnings expectations or earnings growth expectations by street analysts have improved quite considerably, which historically has led to a rally. Now, this is the asset overview where you can usually get a 360 overview of each of the stocks that Toggle covers. There are 15,000 assets covered in all. But when you would like to get a little bit more detail about this specific thing, as it's described over here, you can simply click on this and it'll take you to the page where you'll be able to get all of the details about the latest insights. So in this particular case, as we mentioned, analyst expectations for EPS forward growth are high, and in the past, this has actually led to an increase in price. And in particular, what we've seen here is that Nike has recently had a bit of a rough time, and so the system is suggesting that this could potentially be quite an interesting point for a bounce. The entry point is 134.78, and if the history is a good guide to what could happen in the near future over the following month, stock could rise as high as 140.70 or even higher than that. This is the confidence interval within which you would expect the stock price to stay if earnings expectations indeed are the driver. And of course, if it were to drop below 131.82, this is the time to reevaluate the hypothesis, because presumably it must be some other driver that is actually powering the stock lower. Now, clicking here on why it might move, the system shows you the setup and the previous moments when a similar configuration was also in play. And so you can see that these have typically coincided with pretty good periods for Nike, in fact, continued rallies. Also worth noting, in addition to very, very high EPS expectations that we're currently seeing, there is also the fact that the range, this is the 1 month return in the stock adjusted by volatility, has just turned positive, and so potentially this thrust could extend over the following month to deliver the return that we mentioned. Going back to this here, this is of course only a 1 month horizon, and 4% is over this horizon, but of course the key here is to consider how this fits with your overall fundamental picture of Nike, and also whether or not it satisfies other criteria you might have for the entry into a position like this one. Finally, always worth looking at the backtest. The backtest here shows you the actual returns that have happened previously when these insights were published. So a combination of positive return adjusted by volatility as well as high growth of earnings expectations, and you can see that in fact occasionally it exceeded by quite a good margin the 4% number that is the median highlighted above in the chart, and also a substantial shift in the distribution of returns to the right whenever this expectation was high as it is now. So much for Nike today. In the daily brief, we also discuss the reasons why gold has substantially underperformed expectations. If you subscribe to it, it should already be in your mailbox. Otherwise, check us out on toggle.global. Thank you. See you tomorrow.